According to most sensible people and the New York Times as well, most asset classes around the world are expensive by historical standards. Whether it be posh art, stocks and bonds, emerging markets, or advanced economies, urban office towers, or Iowa farmland, says the New York Times, you name it, it's getting pricey. This is Tonight. I'm Bruce Whitfield. Welcome to the Everything Boom and quite possibly the Everything Bubble. Joining me this evening is Savo Tufegdzic, from StephanWelz Co. He's the head of stamps in the coins department. He also knows a thing or two about pretty paintings and some ugly ones as well, which are very valuable. Cobie Legrange, he is the investment strategist at ClucasGray. Before we talk about the stuff that adorns our homes, Cobie, we go back to the financial crisis and we focus on the JSE, for example. The market got pummeled in 2008, 2009, leveled off just below 18,000 on the all-share index. It has seen a massive rally, all the way to north of 50,000 since then. Are you in the New York Times camp of saying it's expensive?
Bruce, I think what one has to do is one has to understand markets and one has to look potentially at the subprime crisis, what happened there, the kind of throwing at the market, so to speak, of money and free capital, and what that has done to emerging market valuation. So if you look at South Africa and you look at the valuation on the South African market, the 17p that we see on the market, we get there at about 10% of the time since the 1960s. So yes, from an emerging market perspective, I think South Africa is expensive. Yes, there's great examples, other examples in the emerging market space, but that's not necessarily the only examples. I think there are markets that are fairly priced out there.
Which markets?
Well, let's go through the list. I mean, if you look at Brazil at 14 times earnings, that certainly is cheaper than South Africa. Look at Russia at 5 times earnings. Look at China, the almost always growing China at 10 times earnings. If you can do business on the Shanghai index, well, aren't those markets that are well priced?
2 words: risk and reward. Brazil, it's had a fine showcase in terms of the World Cup recently. That's all well and good. Russia, dodgy geopolitics, and so. It's a fairly, some people might take umbrage to investing under Vladimir Putin. And of course, you look at China and the data points are schizophrenic at best. And so when you talk about investing in those markets, it's a little bit scary.
But you know what's interesting about the markets? And I mean, we were chatting about this before the show starts, is that if you look at your brain is a backward-looking pattern-seeking system. That means,
I wish it was that complicated, but thank you for the compliment.
Your brain and your brain works, and my brain and everybody else's brains in the world look in the past and they try and find a specific pattern. You've driven into traffic today and some people cut you off. That means your brain will hotwire itself to always think that those kind of people will cut you off.
BMW drivers and others.
Absolutely. Yeah. The market, on the other hand, is a forward-looking pricing system.
Yes.
Okay, so if you're trying to look forward by using backward data, you're invariably always nowhere. And that's the problem with looking at markets. And that is what everybody does. So everybody looks at the historical numbers and say, well, this is expensive. Well, we shouldn't be investing in this. What about looking forward? Maybe looking forward is maybe going to tell us more than just necessarily looking back. Simplistically, though.
You're onto something that, if we're talking China, and I'm talking purely from a philatelic point of view, the Chinese have now become the biggest stamp collecting nation in the world. 10 years ago, they weren't buying stamps.
Yeah.
Record prices are being set for Chinese stamps. It's not the world buying it, it's the Chinese that are buying it. They're actually putting money back into their own, I don't know if they're doing it into the stocks, but they're definitely putting money back into Chinese art, Chinese stamps, Chinese ceramics.
Is that a cultural thing? Is that because they look at the rest of the world, they've got a massive surplus in China, they are one of the world's best positioned countries in terms of growth prospects, and they look at the rest of the world and the Western financial crisis as they look at it, and they say, we can't trust the West, let's focus inwardly, let's look at it that way.
If you ever go to an auction and you're bidding on a Chinese Ming vase or you're bidding on a Chinese stamp, you can hold your hand up like this, and you can hold your hand up, and you can hold your hand up, and you can hold your hand up, and you can hold. And they will go further than you. They will not put their hand down until they walk away with it, irrespective of what the estimated
value suggests that we are, in terms of the stamp world and Chinese world, we can talk about bubbles, in distinct bubble territory, because people are that mad to keep a hand up regardless of what the consequences are.
You look at what happened now in Switzerland at a David Feldman auction, for example, the British Guiana stamp that sold for $9.7 million. And one little stamp. The most expensive commodity now on the planet per weight. The same collection that was now sold off in Switzerland, we were talking earlier, the low estimate was in the region of €500,000. 141 lots, just British Guiana. Nothing great. I mean, I looked at the stamps and they're nice to have, and you kind of say, okay, 4,000 euros is not a bad estimate. They made 6 million euros. Every single lot sold. Every single lot. An auction that should have taken an hour took 3.5 hours. 3.5 hours.
What is this
to do
telling you?
140 lots.
What is this telling you? Is this telling you that people don't trust people like Cobie because he caused the financial crisis, and they would rather have a store of wealth in things that are a square inch in diameter?
No, I actually think what's happening now, people are being more selective in the senses that instead of giving Cobie 100% of their capital, they're saying, okay, you know what, we'll put 50% into that. We'll start diversifying now, and let's put 30% into a tangible asset that I can hold. Gold coins, instead of putting money into gold shares, a Krugerrand you can hold. You can open up your safe, you look at it, you say, it's a Krugerrand.
And while you're looking at it, somebody knocks you on the head and takes it away from you. But are people going mad, Cobie? Is that a problem in the world as you see it? Where you look at the globe and you look at average valuations around the world, sure, returns in places like South Africa to 17 times historical earnings may not be great for the next 2 or 3 years as we grow toward that PE. But people are doing mad things like going to buy pretty pictures and postage stamps for millions. It seems insane.
And absolutely, I mean, I'm going to get him to talk, kind of about the auctions world, because I think he knows a lot more than I know about it.
But you understand investing, and you understand investors' mindset.
Yeah. Quantitative easing has created a certain amount of bubble territory in certain economies. Certainly South Africa is an emerging market. India potentially is chasing South Africa as far from a bubble perspective. I would probably agree with that. I'd probably say to you that there's more froth in the system than there is pure kind of valuation in the system. But that's not necessarily the case if one looks right across the world and one looks at other equity markets across the globe. I think there's, in the mindset of the investor, there is a specific mindset as to what people believe is value, and what people believe is what a store of wealth could be. And those are predominantly the big Western markets. It's property and the big kind of hubs such as London, and if you look at New York and so forth. And there is this perception that if you've made money in the emerging world, you should be placing your money in property in those areas and so on. That is only a perception at this stage. But it's driving prices in those areas. At some point, though, one has to be very careful that perception changes, because when the perception changes, the sentiment changes. And when the sentiment changes, many of those asset classes can't necessarily keep up with us.
And the thing that's been most surprising, I think, about the huge surge that we've seen in collectibles over the last 5 or 6 years has been the fact that it seems to be a bottomless market. The upward pressure, the upward momentum.
Actually, it's not. What is happening? People are being a lot more selective. So in being that selective, when you talk about a pretty picture stamp, the one question you've got to ask about yourself is, for example, we had coins in the last auction, the 1892 proof set, ZR proof set. There were only 10 minted.
Yes.
That means there are only 10 sets in the world. Only 10 people can own them.
Yes.
Not 20, not 50, not 100.
What did you achieve?
On that one, we got two with commission 2.3 million.
2.3 million for a South African proof set.
For ZR proof set. But there are only 10 in the world.
Yes, absolutely.
So you start looking at things like, so buyers are becoming more selective, and it's those selected items that are fetching record prices. It's not the entire auction. If you look at the rest of the items that have been put on auction, the kind of middle of the range, lower class kind of stamps, the cheap stamps, they're not getting record prices. They're actually going the other way. They are not getting the prices
but that's a trouble. And most of us, but the 99.89% of us operate in that real world where we assume a collectible will be an RSA stamp 1972 with a merino head on it. And we get caught up in that trap of believing that we buy collectibles and we invest 10,000 or 20,000 or 30,000 in the hope that maybe in 10 years it'll double in value. And in the real upper echelons of investment art, investment collectibles, you're having to stump up millions to get into that rare space.
Not necessarily. I mean, I remember, I think it was my first show talking with you. We were talking about alternative incomes. I always talk about an alternative income. You get your monthly salary, and you've put some into your hands, and you put some into a couple of different hands. The thing with the tangible asset is that the more you play with it, it's like anything in life. When you start spinning something, and you start playing with it, and you start researching, you buy and you sell, it takes you 1 hour a night. you do your internet research, or you phone up a dealer. The main thing, it's about talking to somebody. It's the same if I was going to put money into stocks. I'm not going to just pick up and take a dartboard and throw it at anyone, which one sounds. I'm going to phone him up and I'm going to say, look, I've got some money, I'd like to diversify it somewhere. Where do I put it?
I'll talk to you afterwards.
He most certainly will, because he's making all these huge commissions on these huge value art items, of course. Do you like the idea of diversifying into tangible assets away from toppish markets?
No, and it makes absolute sense. I mean, as a matter of fact, I see clients that do this kind of thing. But it, in my opinion, it kind of firstly points towards somebody that actually finds the stuff interesting. So you have to be interested in art in order to collect art. There's very few people that I find. There's very few people that I find that kind of sit down and say, well, I tell you what, I've just got the money and I'll throw it at something.
Any Philistine can go and buy an Irma Stern 15 years ago and would have made money.
But I'm going to throw, sorry, can I interrupt you there for a second?
Absolutely. You're going to do it in any
No, I'll tell you why. One of my clients is a financial planner. He's a financial planner. He spent now on a block of 4 PUC the £5 orange, 1.2 million.
What's a £5 orange?
It's a GB. It's a great big orange stamp like this. It's Queen Victoria. He's a financial planner. He advises people to put money into stocks. He bought 1 block of 4 for 1.5 million. He's not a philatelist. He doesn't understand stamps. He phones somebody like me and asks me advice and say, should I buy this one? Why should I buy this and not that one?
Okay, I'm going to ask one piece of guidance from you. Nelson Mandela collectibles. Nelson Mandela died in December last year. Lots of emotion, lots of excitement, lots of sadness, lots of happiness as we come up to Mandela Day. Is Nelson Mandela memorabilia collectible? And will it be collectible in 20 years' time? Or is it a bit like Princess Diana, terribly sad she's gone, but people are kind of happy to consign her to history?
You notice the word you used when you asked me. You didn't say Nelson Mandela investment items. You said collectible.
Yes.
Yes, it is a collectible.
Yes.
And one of the things I always kind of warn people around a Nelson Mandela item is that buy it from the heart, not the head. If you're buying it from the heart, you'll buy it for the right reasons. If you're buying it because you think it's an investment piece, then
is anything in the world of Nelson Mandela that is investable?
No, and it shouldn't be seen as that. We should never, if you're talking Nelson Mandela, and that's purely Nelson Mandela, and I'm a huge advocate of saying we should be collecting him from the heart.
Yes.
You can't, there's too much material in the market to start off with. There are the scarce, unique items. I mean, I've got the palm prints, for example, the original palm prints given to us.
The real ones?
Yeah, the real ones,
and
given by Indelect, yes, his granddaughter. And there's provenance of it. My estimate on that is 200,000, not 1 million, not 5 million, because I want somebody to buy it who's going to cherish it and keep it. And going back into what we were talking about, where you're saying now, the person wants to buy it because they're interested in it. I want people to become interested in Nelson Mandela, the man, and what he represented, not in the fact that he's going to make us money.
We need to leave it there. We need to leave it there. Are we in bubble territory or are we not? We're certainly in passion territory. Savo Tufegdzic, who is the head of Stamps and Coins Department at StephanWelz Co, he's going to be auctioning off Nelson Mandela memorabilia tomorrow. And Cobie Legrange, investment strategist at ClucasGray, saying there is good value to be had, provided, of course, you're putting on your risk jacket. Thanks for watching. There'll be more tonight, tomorrow. Until then, good night and goodbye.